Welcome. It's time to celebrate the incredible story of ITC from a humble 134 rupees per share during COVID-19 pandemic to a staggering 450 now. This stock has made a jaw-dropping 235% returns in just 3 years' time. While some may argue that there are many other stocks that are there in the market which has given more returns than this stock, for a stock that forms part of the major index of our country, this growth is next to phenomenal. From being mocked as a joker of the market for ITC, it has now transformed itself to become the shining star. In fact, we can call it's become the ringmaster of the market today. For those who own ITC, it is a time of joy and pride. While for those who mocked it, well, you have missed one of the greatest lifetime opportunities to own one of our best stocks in the country. The whole market is excited today about ITC. Everyone wants to know if they can buy ITC, or for those who hold, can they hold on to the stock for a longer period. Let's dive into the business numbers of ITC to look at what would be the options available for those who want to own it now and for those who are already owning it. For FY23, ITC's sales was 70,000 crores with a profit of 25,000 crores pre-tax. This company has been making 35 rupees profit for every 100 rupees of sales. To find such profitable companies that too in big businesses is really rare. While there will be people who knows that most of these profits are coming from the cigarette business. While for savvy investors who want to make profits from all their investments, ITC is simply the best business. While the cigarette story is incredible, it only contributes to about 41% of ITC sales and to 75% of its profits. If we remove cigarette business, ITC sales will drop to 41,000 crores and a profit of a moderate 7,000 crores, which will be equal to its peers in the industry who are generating between 16 to 18% profits on the sales they make. So the ITC story is very incredible, and let's dive deeper into its segments of businesses to look at how it fares in each segment. Since ITC is called as a FMCG business, let's start with FMCG. ITC's FMCG business is crucial, forming 1/4 of its total business, that's about 27% sales. While its profits, the FMCG profits is only 5.5% of its total sales. If we take the standalone FMCG business, it is generating 19,000 crores with 1,350 crores of profits. That's about 7%. This is where the valuation of ITC drops severely in the market. No market will give a big valuation for a company that generates 7% profits. Hence, though being FMCG, ITC lags in valuation in the market. ITC has been lagging its competitors in FMCG business. We have done a couple of observations in its businesses, have done a comparison, apple to apple comparison between the products that ITC has and their competitor. We have taken Britannia's cashew biscuit, Good Day cashew biscuit. A 100-gram pack of Britannia cashew, Good Day cashew, is selling at 25 rupees a pack. That is 100 grams, 25 rupees a pack. The same product from ITC, Sunfeast cashew almond biscuits, 100 grams, or rather it is selling at 25 rupees a pack, but it is not having 100 grams, it has 116 grams. That is 16 grams free per pack at the same price. So when Britannia is selling at 25 paisa per gram of their biscuit, same product ITC is selling at 22 paisa per gram. This shows that company is bringing down its margin. Not only that, it is also compromising on quality. Otherwise, you cannot have 16% discount and have at least some profits in the business. This is where ITC lags a lot among its competitors. It is not giving its customers the real experience of using its products. This happens because ITC has too many products to concentrate and very less focus to optimize on the already existing products, and they have been introducing more and more products into the market. But we have also observed there is some change happening. Of late, in the March 2023 quarter, we have seen margins started going up. From the almost lower single digit margins that ITC used to have throughout their lifetime, now they have climbed up to double digit, not big, 10.2% margins. While we expect this profit creation, at least the margin increase, will grow up significantly. They will bring more value add to their product, focus more on their products, and ensure more profitability is there from the FMCG business, because that is where their mainstay is.
Let's look at hotels now. Hotel business as a percentage of total sales is just 4%, and the contribution to profit is only 2%. Standalone hotel sales were at 2,600 crores and profit 542 crores. Very big business in this segment for ITC this year. Above 20% margin. When compared with peers, ITC is the leader. Tourism taking off big time has given overall high growth, and ITC making it big is very good to note. One of ITC's restaurants, Avartana, at ITC Grand Chola, Chennai, has entered the list of Asia's 50 best restaurants. Having experienced this restaurant and cuisine in person, we really had a wow moment here. New properties added to Stories and Mementos brand. A look at property optimization against peers, we see a lag here. ITC with 115 properties makes only 20% more sales than EI hotels who own 35 properties. Taj, on the other hand, own 145 properties and their sales is 140% more than ITC. We can see that ITC is spending more on the hotels and taking out less income from them, which is seriously where the hotel industry or hotel business lags for ITC. Being a regular user of ITC properties, their customer relationship is next to none in the hotel industry, while their properties show a lack of maintenance, which may not bring repeat customers. ITC should focus on reducing spends on acquiring new properties, increasing brand awareness, increasing social media presence, and optimizing their existing properties than adding more.
Agri-business. ITC's agri division has been a significant contributor to its overall sales and profits, almost equal to its FMCG division's numbers. Despite the suspension of wheat exports due to Ukraine war, the agri division has had a sales growth of 12% and an impressive 29% profit growth. This growth has been achieved due to the focus of strategic value add in their tobacco business, tobacco exports. With the reinstatement of wheat exports very soon, there is likely to be more sales growth and more profit numbers coming, thereby solidifying the agri division's presence in the overall ITC business. Coming to paperboards and packaging. Paperboards and packaging is the second biggest contributor to profits for ITC, forming 13% of their sales and contributing to 9% of their profits. While the numbers show supremacy, the business, paper industry as a whole, is completing its bullish cycle. Sales has been flat, profits have been declining by percent. While the positive outcomes here for the company is they are adding new capacities and new product additions, which are innovations created in packaging segment, that is expected to deliver better growth numbers for the packaging industry altogether for the company. Now coming to the mainstay business, cigarettes. The status of gold mine stock for ITC comes from its cigarette business, which helps in generating such huge cash flows, which the company is putting it into funding almost all its business ventures, and also helps in distributing huge dividends to its investors. Cigarette sales for ITC is a significant 40% of its sales, which is 28,000 crores and a profit of 18,000 crores. The beauty here is this business is growing at 20% per annum, and this growth is likely to stay for a near foreseeable future, thereby making ITC to be a cash machine for the next few years to come. Along with all these advantages that the company has generated, government has also played a part in making the business solidify for ITC, which has helped in reducing the illicit products, that is illegal cigarettes in the market, and also keeping the taxes stable, thereby bringing a huge advantage to the whole cigarette industry itself and to ITC because of its stronghold in the industry. Today, for every 4 cigarettes sold in India, 3 are ITC. Future of ITC for the investor. For FY23, financial year 23, ITC's business growth was 17.6% and its profit growth was around 24%. FMCG businesses generally have a growth rate of between 7 to 10%. Comparing that, ITC has made a phenomenal growth this year, and of course it cannot repeat consistently over a longer period. So let's assume the higher number, the double digit 10% growth, and see what will be the sales and profit numbers for the next 2 years. At 10% growth, for FY24, ITC will have a sales of around 77,000 crores and a profit of 20,600 crores, which will result in an EPS of 16 rupees 60 paisa per share. For FY25, sales should be around 85,000 crores, profit at 22,700 crores, translating into a earnings per share of 18 rupees 27 paisa per share. Today it's around 15 rupees plus. The valuation of ITC today in the market is at around 29 times its earnings. The stock price today is trading at 29 times its earnings. ITC's average PE is 23. We can see the elevation of price. It is hugely overpriced now. Suppose, keeping aside 29 PE and look at 23 PE, that's how ITC used to trade regularly. At 23 PE for 2025 earnings, EPS, what will be the stock price? At 23 PE, ITC should be trading at around 421 rupees in 2 years from now. As it is, the stock is at 450. We can see the overvaluation in the stock. So it is not at all good to buy the stock now. So keeping aside 23, let's say it's trading now at 29 PE. At 29 PE, what will be the stock price 2 years down the line? It can be around 529 rupees. So ITC can be trading in the band of around 421 to 529 in the next 2 years. So obviously, for those who see that, okay, I am buying at 450, stock is having a potential of going to 530, I will make 80 rupees profit. That is only one side of the coin. There is a potential for going down also. So we would suggest, if you are wanting to make short-term profits in ITC, as of today, the stock is to correct to at least 20 to 23 PE, which will be somewhere around 300 to 350 for the stock price. That's where it will become very attractive. So when we buy at that price, the potential of profit is between 20 to 50%. That's where we have a higher elevated profit. So downside is also very, very less. For those who feel that you have missed out to own this great business in your asset, it will be good to wait for a correction where P reaches around 16, 17. That's where it will become very, very attractive. Of course, it will take long time. It might not come in the near future also. FMCG businesses are cash machines which never let their prices down. Only on some knee-jerk reactions, like 2 years back, ITC had this ESG issue which got the stock price hammered, similar to what we had in Nestle, I think in 2015, because of lead content in Maggi, stock got hammered 30-35%. In such conditions, only these stocks are available at throwaway prices. So have cash and wait for not only ITC or Nestle, you can wait for all the FMCG businesses. When some negative news comes, look at their average PE, below the average PE. If it is trading, it's very good to pick them up so that you have a crown jewel in your portfolio to gift it to your grandchildren, and you can feel very happy about your legacy. Dividends. FMCG businesses like ITC pay out 85% of the profits that they make in a year as dividends to their investors. Dividend for current year, thanks to the special dividend of 2 rupees 50 paisa, we are getting 15 rupees 50 paisa per share as a dividend for this year. In FY24, without the special dividends, we should be getting around 14 rupees per share. In FY25, this dividend should be coming back to the same 15 rupees 50 paisa. Wonderful businesses like ITC should reduce paying out dividends and instead spend more in creating value to their products so that customers come back as loyal customers to buy their products. So, if not selling at premium, at least sell at cost and reduce selling at discount, with expectation that This company will change its course of business in the coming years and help create more value add to their investors. It is time now to celebrate the great journey that ITC has had in the last 3 years, creating wealth for its investors. Cheers, current investors and future investors of ITC.